While the word dependents usually refers to a son or daughter of a taxpayer, there are some circumstances in which the grandchild of a taxpayer may be considered a dependent as well. The federal tax code lists a variety of factors that need to be considered when making this determination on your personal tax return, and the IRS takes them very seriously. For example, a grandparent who provides full-time childcare for their adult son or daughter would not be able to claim his or her grandchildren as dependents. However, there are specific provisions that do allow a grandparent to claim his or her grandchildren on a personal tax return. This includes a stipulation that says grandchildren must live with their grandparent for at least 6 months of the year. That means the grandchildren must sleep overnight at their grandparent's home at least 183 times within the calendar year that's being filed. This steadfast stipulation must be complied with, even if most of the grandchildren's expenses are paid by the grandparent. A tax credit for dependents can only be claimed one time, and the parents of the dependents have priority. This means that the grandparent must confirm that neither parent intends to claim the tax credit for the dependent. Both parents must waive their rights to claim the tax credits in writing before a grandparent can file their tax return claiming their grandchildren as dependents. There is an exception to this rule. If the parent and child live with the grandparent has the right to claim both as dependents. In order to apply this exception, you must have paid at least half of your adult child's financial support and he or she earned less than $3,950 in taxable income that year. In addition to the parents waiving the right to claim their children as dependents on their tax returns, grandparents must have a higher income than their adult child's or their grandchildren's other parent. If your grandchildren's parents waive their right to claim their children as dependents, the credit won't be available to you unless your income is more than your adult son or daughter's. A word of advice: the tax credit for each dependent is a substantial $3,800. If you're a grandparent who's unable to claim the children as dependents for any reason, talk to their parents about approaching their tax return with a different strategy to maximize deductions for the dependents. Further limitations to consider include additional salary rules, living arrangements, age limits, and other relationships. Additional salary rules address disability and union strike benefits. Additional salary rules address disability and union strike benefits, as well as employment status before retirement. Investment income is limited to $3,500 or less to qualify for dependent credit. If you haven't retired yet, or you have other income avenues, such as rent from an investment property, your income limit may be as high as $55,000. The specific limit depends upon your marital status and the number of dependents you claim. Another consideration to include is your grandchild's age. A grandchild may be claimed as a dependent. A grandchild may be claimed as a dependent by a grandparent if he or she is under the age of 19 or 24 if enrolled in higher education full-time. This age limit doesn't apply to disabled grandchildren. Finally, claims for dependents aren't restricted to children and grandchildren. The IRS allows provisions for taxpayers to claim a child who's not directly related to them, such as a great-niece or great-nephew. The living stipulation in these cases require that the child live in your home with you 365 days of the year as your dependent, and both parents must waive their right to claim him or her as dependents on their tax returns. When preparing your tax returns, be sure to avoid listing your grandchildren as dependent children. They need to be specified as grandchildren or another relation appropriately. We hope you found this video informative. If you have any more tax-related questions, check out our blog for all the answers you need.